When market conditions rapidly change for the worse, investors might let their emotions get the best of them and start making ill-advised portfolio decisions, like ignoring sell signals and hoping for a quick rebound, waiting and selling right at the bottom, or trying to buy merchandise that's quote-unquote on sale before momentum shifts back to the upside. But savvy investors know how to track market conditions and adjust their portfolios swiftly before conditions worsen. And waiting for a new uptrend before getting back in is key too. So let's take a closer look at the market action that led IBD to be cautious before the coronavirus-fueled sell-off worsened. Now, even before the sharp declines of late February, IBD was saying that the market could be due for a pullback. That's because when the Nasdaq was hitting new all-time highs, it was bumping up against an upper channel line. Now that indicates a pullback from those levels would be quite natural, and so was the fact that we were getting so far extended above this 21-day moving average. Also, on this down day, February 20th, the day after hitting an all-time high, that provided a tell for what was to come, even though stocks were able to close well off of lows that day. This marked a change in tone and was a clear warning sign for the uptrend by undercutting the low of February 18th in intraday trade. IBD cautioned that a break below that level in this manner was abnormal. Now the next day, the selling picked up, indicating that the market was now vulnerable. IBD warned that day that a full break to the 50-day line would be a game changer for the market in a negative way. And come the following session, that's exactly what we got. That prompted IBD to downgrade market conditions to uptrend under pressure and to market correction the following session. While many high-flying stocks now look cheaper, now is not the time to be aggressively buying stocks. We don't know when the correction will truly be over. That's why IBD waits for what we call a follow-through day as our signal to start getting back in. Just 1 or 2 days in the green after heavy losses is not enough to signal true upward momentum. Now, in a rally attempt, it's important to see at least 3 days of buying in heavy turnover to change the market tide. That's a simple explanation, but it can get a little complex, so make sure you're following IBD for up-to-date insights. Now, headlines can move markets very quickly. But again, IBD's experts are able to accurately analyze trading conditions in real time. If you pay close attention to the technical action in the major indexes, you'll be able to react more quickly and know when to get into and out of the market. Okay, so when we come back, we'll hear how Bain & Company is advising clients to adjust their business contingency policies to minimize operational disruptions caused by the coronavirus epidemic. That's after the break.